the CEO of Golden Life Group. I want to welcome to the show Pernon Dunston.
Nice to be here. Thank you.
So, what is Golden Life Group?
Okay, well, we're a financial planning company. We work with the youth, and we teach them about financial planning. I use life insurance as a platform to secure their finances and have money later in life.
Okay.
So, but we barely have enough money to get coffee. How do we think about the future when we don't have enough money in the present?
So the way I price it, and it's a good thing you said that, because someone said, well, how can I afford life insurance? Well, how much is your cell phone bill? Could be $120, could be sometimes $250. Well, if you put,
What type of cell phone coverage do they have?
well, it could be Verizon.
Is that Verizon is expensive, but it is the best cell phone coverage.
Right, it
Yes.
works everywhere.
Yeah.
So with that money there, you never see that money again. You're paying for a phone service, you never see that money ever again. But if I put the money into an insurance policy and I set it up to where you can access that money later in life, then it's more of a savings versus.
You're talking about whole life then?
Yes.
Okay.
But I use it to where I set it up to where they can get the money out early. It could be in a year or two, it could be in 3 years. You don't have to wait 5
Tell us more about that, because whole life is something I'm very confused by, and there's whole websites dedicated to
what
this.
is it? What does that mean? Too many jargons. Nobody wants to read through it.
Right. It's to me the ways you could do it. The traditional whole life policies, you can't touch the money, which we call cash value. The cash value is a percentage of the money you put into the policy that you could touch after 5 years. But we could structure it to where you can take the money out in the first or second year, depending on how much money you put in it.
Through a loan, right?
Through a loan. But what's a loan? It's just a loan from the death benefit. And that's the way you get around paying taxes, because the money you put into the policy is not taxed on.
Okay, sorry, I'm still
I know
confused.
it's a lot.
Can
It's a
you-
lot.
can you-
Yeah,
can you- yeah. What am I putting in? What can I get?
Right.
Yeah, walk us through an example.
Yeah.
So again, if the monthly payment is $100, let's say it's $100 a monthly payment, right? I set the policy up to where you can access your cash value in the second year if you want to.
Is that pre or post-tax dollars that you're putting
Tax.
in?
Okay, so
Pre-tax.
the cash value by the second year, so I put in 100, so by the second year it would be 1,200 times whatever the rate.
Yeah, I could set it up that way. I
Okay.
could set it up that way. The traditional whole life policies, normally it's after 5 years you can touch the money, but I could set it up to where you can receive the money in the first or second year, depending upon how much you can afford to put out.
But why would I do that as opposed to something else?
It's creating a savings. It's creating a savings without being taxed on. So you put your money in the bank account, you're taxing that money with no death benefit, of course. You put your money into the policy, you can receive that money later tax-free instead of a death benefit there for your family if something happens.
So are there fees associated with this? Like let's say if I put $100 a month in, $1,200, how much is in my account at the end of the year?
Well, it'll be that. What you put into it will be there. It won't be any extra fees added to it. There's no extra fees. Only thing is when you take the money out, it's a loan against your policy. So most insurance companies average 6% interest once a year or whatever you take in.
But interest to yourself, correct?
Right.
Okay, this is where it gets super confusing. Did you know
Super
that?
confusing.
Yeah.
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 401ks as well. When you
Right.
take out loans, you're paying interest to yourself.
Exactly. And the only difference between a 401k and life insurance is no death benefit. Life insurance is the only thing that has a death benefit. Versus a bank account versus a 401k, annuities, although they have the death benefit is what you put into it.
Okay.
Versus the whole life policy, your death benefit 10 times what you put into the
Okay,
policy.
so what I'm hearing is, follow your example, is $100 per month, $1,200 at the end of the year.
Yes.
If in your policy I don't get any interest, I don't get anything else except that benefit.
Right.
If that were to happen. Right?
Well, no. That money you put into it is the cash value. Death benefit could be $100,000.
Right, but I also get that cash value from a, what do you call it, high yield savings account.
Yeah, sure.
Yeah.
Yes.
So I miss that, but my payback would be that benefit.
Right.
And it's pre-tax dollars and then
Yeah.
non-tax dollars coming
Right.
out. Okay. So you're saving about, depending on your tax bracket, you're saving about 20%.
Yeah.
Right.
I
Yeah.
personally, I do not think a lot of our viewers would be benefit from that because we're not talking about so much to begin with. Like most millennials and Gen Z viewers are not in the 40% tax bracket.
Well, it depends. Some in their late 30s
Very
are now.
few.
Very
Yeah,
few.
Very few. There are some.
Well, I a lot of times the way I go about getting clients, I get contracts with different business owners, and I go to their job sites and I offer the insurance to them while they're working, and I set up to where it come out their paychecks actually. So again, it's pre-tax.
So you don't even miss the money.
Yeah, they don't miss the money. And
Yeah.
now, let's say 3 years from now, they call me up. I said, what do I have? 'Cause I don't know what I signed up for. Well, you have $3,000, $4,000 in your cash
Whoa.
value. Like, oh, well, can I get it? Of course you can get it. And we send them a check. It's not a lot of money, but versus not having it,
It's like a forced savings account.
Right,
Yeah.
right. And it could be more than that. It's just that's on the base.
Yeah, well, there's a lot of automation of savings. We talked about that earlier in the show. So, in other news, you bought an entire city block.
Yes.
I want to know everything
is that
about
about?
that. Yeah.
So here in New York, right? I specialize again in employee benefits.
You bought a block in New York?
in North Carolina.
I was about to say, I'm like,
But the reason why I bought the block in North Carolina because again, my business, I work with business owners with large companies, 100 employees, 500 employees, 1,000 employees. So my plan to buy the block is to bring commerce to that city block.
what city is this in?
It's in North Carolina. It's called Wilson, North Carolina, right outside of Raleigh.
Okay. Yeah.
I mean, the Amtrak actually stops at my building. Like it's
Really?
At your building.
yeah.
That's not a bad investment
No,
then.
no.
So you can technically, I mean, you're not going to take the train from here,
Doesn't it
but
get
Well,
loud?
it's 8 hours. It's 8 hours. It's no different from
Yeah,
you know
okay,
in Brooklyn,
yeah,
you know Broadway.
You have like fringes
so
over
what's
your
on the city block? Is it residential? Is it commercial? Is it industrial?
It's all commercial. Right across the street from me, the Marriott just built a courtyard there, so the city is growing. But my whole idea of the block is to bring businesses there, and in turn, me offer insurance to the employees of those businesses.
Oh, interesting. But also you have a long-term hold
Yes.
option,
Yeah.
which you're hoping that
Right.
the price of your real estate goes up
Right,
over time.
Right. Because
Why do you think land ownership is important, especially to minority communities?
Well, I mean, it's a lack right now. I mean, it's really a way to control the area. I mean, what comes in and what goes out. I mean, if you don't own the land, you really don't control what comes in and what goes out. You know, you have no control over that.
So you feel like you have a lot of influence because you do own this entire city block. So people come to you,
Right.
And you hold all the cards. You could decide to rent to them, not to rent to them, get a business.
Yeah. What businesses to be there, you know, what not to be there, what's good for the community, what's not good for the community. You know, some people just rent out to anybody. It may not be good for the community. It may not be beneficial to the people who live in that community. So.
Have you filled it up with renters?
Some, not fully filled up just yet. I still got some more work to do, but I have a few tenants there right now.
Really?
Yeah.
But you came in with that expectation, right?
Yes, yeah. I came with the expectation of bringing businesses to that city block, bringing commerce there.
Do you feel like property ownership is accessible to young people?
I would say probably not really, because you need cash. You know, you need some way of building your cash flow. I mean, yeah, you can go to the bank and get a loan, but they still want to see.
Still hard.
Yeah, it's very difficult.
Especially commercial loans. That's
Right.
complicated.
Commercial
Yeah,
loans is super
yeah.
complicated.
A bank didn't give me the money for this property.
Yeah.
You know, my insurance sales. I'll be honest with you, my insurance sales here in New York, I purchased that property with. You know, and I wanted to buy something. I'm from Brooklyn. I wanted to buy something in Brooklyn, but I couldn't afford Brooklyn.
$1 million.
Compared to suburbs.
Come on.
North
You could buy
Carolina.
5 city blocks.
Yeah. Yeah.
Exactly, yeah.
So what's your advice for people? Save up the money and
Save. I mean, the best thing to do today is save. I mean, it's really the only thing we really can do is save. You know, I mean, that's the only we could do is save. And by creating life insurance, of course, is one way of saving, guaranteed saving. You know, but saving is the answer. Saving. We spend a lot of money on different things that we really don't need, and you know.
Yeah, sometimes on things we don't even want.
Right. But
all the time. I don't even know why we spend that money.
we're marketed to do it. Like we're told to do it. You know, billboard. You know, social
Ads,
media.
oh my
ads.
God.
Like it's you really can't escape.
Some of
it.
the worst stuff that inceptions your brain are the food ads.
Yes.
And it's not even expensive food, it's cheap food.
Right.
Fast food.
Yeah,
Right,
not so healthy.
And it adds
No.
up. It adds up.
Yeah, oh, and then you're dealing with healthcare costs, which is a lot more important
There you go.
than saving $5 on food. But anyway, that's another
Yeah.
topic for another
All right,
day.
well, we'll leave it there. Thank you for joining us today.
Thank you.